76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt, teach you how to increase your credit score, teach you how to make more money at your current job or your current business, and then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Ronnie Lambeth, and this is The School of Wealth. Show. Today, I have a very special guest. He is an investor, an entrepreneur, and an author. He's known as one of the top producing loan originators in the country, also the CEO of Christian Financial. He's helped tens of thousands of people with influential coaching, real estate university, wealth management, mortgage brokering. He's also written 2 best-selling books, one called King of Real Estate, and the other is 10 Habits of Highly Successful Loan Originators. It's been featured in Bloomberg, CNN, Good Morning America, Great Day Houston, Houston Chronicle, Business Insider, and numerous other podcasts, including one of my best friends' podcasts, Bradley, with Dropping Bombs. So that's where I met our guest that's coming on. And he helps people with single family, multifamily, commercial real estate, all of that stuff. Also a husband and father. So it's my honor to have my next guest, Angelo Christian. Thanks, Angelo, for taking the time to come on the show today.
Yeah, absolutely. Thank you so much, Ron. That's probably one of the best intros I've ever had. I really like that, man. You got it down, bud.
Yeah, thank you.
Yeah.
Thank you.
Oh, yeah. Thank you for having me.
So I am here in beautiful Boise, Idaho. I just got done walking my dog. We were talking about that before we come on, that you and I are both, I don't know if you know this, but do you remember when you first met me, I was 260 pounds.
Yeah, you're a big boy.
Yeah. And as of this morning, I gained back a little bit of my lost weight from 75 hard. COVID-19, I took a little month off, and I did really well with the first part of COVID. So I gained about 8 pounds. So I'm like 225 now. So I've still got a little ways to go. But you've lost quite a bit of weight.
Yeah. Yeah, no, I have. I've lost over 200 pounds. Yeah.
Wow, man. That is insane. How'd you do it?
Well, I mean, really just diet and exercise. I grew up
really, that's all you did? Diet and exercise?
Yeah. I mean, really, I grew up in a family where food was everything, and I had to really rewire my brain on changing the way I looked at food. And so, I mean, we grew up eating nonstop. My father was a restaurateur. So food was the central theme of our life. And so I had to really, when I was 18, I had a heart attack and almost died I was 400 pounds.
Wow.
And yeah, man. Yeah, it was scary. So that was like my rock bottom where I had to make a change. I couldn't even get clothes through, at a regular department store. I had to have all my clothes tailor-made. I had no friends. No one wanted to hang out with me. I was bullied all through school. I dropped out of the middle school because I couldn't handle the pressure.
Yeah.
So it was a rough life, man. And
I never experienced that as a kid. I was the little kid. That's the thing I experienced. I was the smallest kid in high school, my freshman year in high school, the smallest out of 400 kids. And I just started growing. But it's interesting. My good friend Andy Frisella said this in front of a group of us at Arte like a year ago, and I never experienced the whole weight thing until I got sick with Lyme disease and just laid in bed for a while. But I never really understood. I never really had empathy. I never made fun of anybody for being fat. I had my mom's family's real heavy. It was never that, but I never had empathy. And I don't feel sorry for people, but now I have empathy. And the reason why is because Andy had said on stage, he goes, imagine if you're a heroin addict and it's easier to quit heroin than it is for a fat person to give up food. And it's because with heroin or smoking or alcohol, you just quit. With food, you still got to eat 3 times a day or 6 times a day or whatever. So it was that moment I'm like, I realized how cold I was being, and then I need to be more empathetic for people that are overweight because they got a bigger challenge than somebody who quit drinking or quit heroin or meth or whatever.
Yeah, no, it's been very hard to balance control with my stomach, and because really it's really just about self control. And I used to eat really fast and just kind of stuff it down, and not really appreciating the taste of the food, or and it's a complete rewire of the mind. And so yeah, it's and then obviously the exercise. I mean, I couldn't move at that time, and I slowly got into running, and I did some bodybuilding for a while. So yeah, I mean, I'm just a huge advocate. That's why I'm on a treadmill desk today.
Yeah.
So
I was going to say that if you're watching this on YouTube, you can see him walking on a treadmill desk. If you're listening on one of the podcasts, you can't see him, but he's actually on a treadmill walking right now with his virtual background behind him.
Yeah.
Angelo, how many miles do you think you walk a day?
So it's about 20 miles a day.
20 miles a day.
10 hours a day or so. It's every day.
Every day.
Yeah.
Wow.
Every day.
And you're able to type and all of that?
Oh yeah. So behind me is it's my virtual, this is my actual office behind me.
Okay.
But actually, it has a large desk, and it has my computers, all my screens, and I'm just walking at a speed of 2. So it's very manageable.
Yeah. I'm glad you brought that up. And when I read your bio this morning, I was really excited because I'm looking at it. I'm like, we have so much in common. We're both in the financial services. We were both overweight and unhealthy. We both grew up really poor. We both built multi-million-dollar companies, and we have mutual friends. So it's really cool that, I think we met years ago, but we really never, up until today, we really never talked before or anything, right?
Right, that's correct. Yeah.
I think you've been sending me some credit repair leads, which I appreciate, so we can turn those around, turn it back to you as a mortgage qualified person. So I appreciate that. But
absolutely,
I was excited to read your bio and just get to know you today. So
thank you.
Your primary business is loan origination.
Right. So
right.
That's right. Yeah. So our main business is mortgage origination. We do residential and commercial mortgages nationwide.
Okay.
Yeah.
So residential and commercial nationwide?
That's right.
What about multifamily?
Yeah. So that would be in line with the multifamily. Commercial. So commercial space is, it could be a master plan development, like what Las Vegas is undergoing a lot right now. Mm-hmm. A lot of development, giving funds to a developer for a horizontal or vertical fund. Like my office building behind me, we funded this development right here.
Oh, wow.
Okay. Yeah. So it could be for something like that, or let's say that, like a large investor that wants to purchase multifamily properties through Fannie Mae, like an agency loan or ground up construction with FHA to build a multifamily apartment complex. Investors looking for yield or investment opportunities, could be for senior housing, student housing, mobile home parks. We fund all those things, or just a veteran that's trying to buy their home.
Is there a number, like you have to do X, you got to buy at least a $300,000 home or $50,000 home? Is there a bottom or a top?
You mean as far as what our lending guidelines are?
Yeah. Like an ideal client, is it?
Yeah. So I mean, so for residential, our minimum loan amount is $200,000.
Okay.
Our minimum loan amount, and for commercial, really our minimum loan amount is $1 million. So that's really
that makes sense.
Our minimum loan amounts that we can accept to work on. And so I mean, we help all different types of people. A lot of people that we service, especially now through COVID, where a lot of lenders are denying people for loans because their credit's not A1. They don't have a 750 FICO. We'll take that client in. Maybe they have a 580, 600 credit score, and we'll help to boost up their credit and then get them pre-approved so they can actually purchase their home. So that's what we've cut our teeth on the last 2 decades.
Yeah. I don't know if you knew that about me, but that's how I got the second time I got involved with credit repair was I owned a real estate company.
Okay.
2007, stuff starting to go sideways, and big crash hadn't come yet. But my specialty was list your house with me, and I guarantee the short sale will not show up on your credit report. And I did that hundreds and hundreds of times. And then when all my competitors were doing, first home buyer seminars, I would do bad credit seminars, and I would teach people how they could buy a house with bad credit. And essentially, it was come in, let me fix your credit. You got 450, let me turn it into 650 in the next 90 days. And then I turned them around and turn it back into buyers. And that's really how I got started with that. And then 2010, I got offered a position with Real Estate Radio Network, and I started a radio show all about real estate and credit, and the rest is history on that. So it's
wow.
But it's all educational, and that's what a lot of people don't realize is it's only 35% of your credit score is payment history. 65% has nothing to do with whether you pay on time. And yet everybody focuses on the 35. So when you're saying that you're helping them increase their score, you're obviously helping them with the other 65%, credit cards, loans, inquiries, managing their credit, correct?
Yeah, I mean, it depends. Like, so what we do, and that's why we partner up with you. If it's a mild case of credit repair, like either we'll do a rescore where they'll have to pay down. Let's say that their utilization's maxed out. We'll either have them pay that down or do settlements. Let's say that they have, like for example, government loans, FHA. If they have medical collections, we'll have them put them in dispute because that doesn't affect their approval with FHA. They can actually have those accounts in dispute. So if it's basic things like either paying down balances below 30%, or getting collections disputed, and then either get a deletion letter, then we'll rescore that. But if it's heavy stuff, we much rather refer to you guys as the expert. Sometimes we'll add trade lines, like which I wanted to actually talk to you about what your opinion is on trade lines. Because we sometimes will have them do authorized users or secure credit cards. Sometimes if someone has thin credit, that will help pop it up. What's your opinion on like purchasing lines of credit?
It's a very, very powerful tool. I generally don't talk about it very much because there are some bad characters out there, bad actors that sell trade lines. The largest one in America is actually a really good friend of mine, runs a legit business, licensed, bonded, and he sells it the right way. Most people sell it as in, buy this trade line and you're going to have a 750 credit score tomorrow forever. And that's not how this works. It's a temporary thing, and generally 45 to 90 days, depending on the contract that you sign. And it works as long as you have other accounts on your credit. So if you have nothing on there, getting 3 trade lines is not going to help you out.
Gotcha.
The big thing that helps, or I should say what's the word I'm looking for? The number one thing that I will recommend, or when I do recommend them to use Michael Burrow's company, is they have plenty of trade lines. It's that they owe $30,000 on a $30,000 credit card. So they're maxed out. They're overutilized. They're 100% utilized, 50%, 30%, whatever it is, and they need 50 points. But they don't have the cash. And so I will recommend Mike Burrow's company to do the trade lines because they can get a credit card that's got a $50,000 credit limit, and that will help with their utilization rate because it's not, you don't always have to pay it down to get the utilization fixed. Sometimes you just add a couple credit cards. So the main reason we use Michael Burrow's is for our clients that can't pay down their credit cards. They're overutilized.
I see.
And then that really helps because they already have established credit. They have the thicker file. Fannie Mae, Freddie, they don't care. FHA, they don't care if they have 2 or 3 extra user accounts on there. So I like authorized users. It's one of my staple things. If you have poor credit scores, get your family, your friends, your employees, whoever you can to add you as an authorized user, because this is a great way to increase your credit score. So I really like them. What I don't like is the guys that run these ads on Google and Facebook, buy our credit card and your scores will be 800 tomorrow forever. It just doesn't work. But you did say one thing, and I will say this over and over and over again on stages. I say it on TV. I say it on my podcast. Mortgage brokers and real estate agents are generally taught by their people that the utilization rate's 30%. And I'm assuming that's what you were taught as well, because you said 30% earlier.
Well, yeah, I mean, so when we basically, yes, I mean, to answer your question, yes. I mean, when we run a simulation, what we do is we'll find out what that magic number is. Sometimes it's less. But yeah, I mean, that's what I've always been led to believe.
Yeah, and that's where it comes from, is the simulator. For folks that have never been in the mortgage industry, you can go in when you have the ability to pull credit, you have a simulator, and you can put in different scenarios, hit submit, and it will simulate what your score is. You can also do this on myfico.com. It is free. When I actually go in and get work as a credit expert witness, I use the myfico.com app because it's within plus or minus, I think it's 4 points. Extremely accurate. But the real numbers are 10% utilization rates. So for every 10% that you utilize, you're losing 10 points approximately. So even at that 30% utilization rate, they're still losing 20 points. So it's just something that to keep in mind. I know the simulators will say 30 because that was an old FICO model. But what we found is, according to FICO, I mean, that's straight from FICO, it's roughly 10 points for every 10% that they use. And the other thing is, you must spend at least 1% every month. If you keep it at zero, I know you've seen this. You've done tens of thousands of mortgage apps. You've seen this where it's at zero. The underwriters make you close those accounts.
Yeah. There's a risk that they could charge it up.
Yeah. So I always recommend, keep using your cards. And FICO, what will happen is FICO will kick it out of the algorithm if there's not any usage on those cards. So they want to see a 1% utilization every month. Doesn't mean you have to pay interest. They just want to see that you're using about 1% of that card. So that perfect scenario is 1 to 10% in there. So
okay, that's good to know. So basically, if someone has $1,000 high credit limit, they need to keep it under $100.
Under 100 over 10.
Yeah.
Now, they don't need to maintain a balance. They need to use it. So a great thing is Netflix.
Yeah.
I don't know very many people without Netflix. I got a couple. Mom doesn't because she doesn't have internet. But outside of a few people, most people I know have Netflix.
Yeah.
Or a cell phone or electricity. Yep. And just put these little tiny bills on these cards and set them up on autopilot and forget about them. Just set them on autopilot, auto pay, and you're good.
Yeah.
So I want to talk to you about something with residential. I'm a veteran, and I wasn't in the market to buy homes because I've been buying multifamily, and I take all of my money that I save and I generally do index universal lives, or I'll do my SEP IRAs, or I'll do multifamily investing.
Okay.
And I truly believe, even though Grant Cardone and I don't see eye to eye on almost everything, I do agree with one thing, which is rent where you live, own what you rent. The idea of that. And so I've been looking at some ranches here in Idaho, but I didn't want to take a couple $100,000 out of one of my apartment complexes for down payment. But with this new VA, no money down, no limit. Have you done any of these loans yet?
Yeah.
What's the highest you've done so far?
$1 million. So far, it's been $1 million.
$1 million. Okay. Yeah, because there's a house I'm looking at that the day before the COVID got announced, like legit, we're shutting down. We were writing an offer on it. It was a little over $2 million. And I think I can probably get it now for 1.5 once everything settles down, because I'm seeing that here in Boise, 10-20% price reductions on luxury homes, are you seeing that in Houston?
Yeah, well, I mean, obviously we're centered for oil and gas, and we got hit hard with what happened with oil. And so, like in my neighborhood, the average home, is about 3 million,
Okay.
and that's on the lower end, and they're just sitting, and they're seeing 5 and 10% haircuts. The big stuff that's 7 and 10 million, that's kind of the norm in my zip code. Is it's not moving, it's been on the market, and I suspect that because a lot of these are CEOs of Exxon and high level management, and it's a concern, man. They project that over 200,000 people are going to lose their job in Houston just from oil. So good opportunity for investors,
Mm-hmm.
but there's even though I'm sure a lot of America is starting to open back up, the mortgage industry is still extremely nervous, and the guidelines they haven't lightened up.
Yeah.
It's pretty tough right now, and so we're obviously trying to do what we can to. The biggest thing is credit. They've really ratcheted up the credit requirements for customers, consumers.
What is it now on residential?
Yeah, so for you really to even be considered at 660.
660.
Yeah, 660, and prior to COVID, we were doing 580s, 550s.
Yeah.
So and then the non-qualified mortgage, not the private mortgages, have just kind of died. And private investors have just kind of gone on the sidelines, like no doc loans, and so. Because those were the concern, that those were the biggest ones that were going to go into default because they didn't verify their income. And so, it's interesting, to see. We'll have to see how this all in hospitality. People that have jobs in hospitality, they're having us, all the applicants that when they go to closing, they have to execute an addendum stating that they will not file for a forbearance or they can't get their home.
Wow.
Because a lot of these consumers, as soon as they close, they'll file for a forbearance.
Really?
Yeah.
I know I saw someone on Facebook or Instagram, I don't remember, and it was, the bank called them, asked them if they wanted forbearance, and they're like, I guess I'm in the middle of my refinance, but sure. Well, you know what happened?
Yeah.
Refinance went away, and they're losing like $800 a month right now.
Oh, wow. And
they didn't need to. They're like, sure, if you're going to cancel it. The only thing I've done a forbearance on one thing, and I actually didn't even do a forbearance on it. It was automatic forbearance, and that's on SBA loans.
Okay.
And I didn't know it until I got an alert on one of the news things that I subscribed to, and it was all SBA loans are being paid by the federal government right now. And I had been making my payment anyway. And the only reason I stopped making the payment was because it's like at 4.5% interest or something stupid. And last year I got divorced, and I had to use some credit cards to get out of that. So, that stuff's 20% interest. So, why pay $5,000 a month on SBA at 4% when I can throw it on a credit card? And as of about a week from now, I will be 100% debt free on that. So It's pretty cool.
Awesome.
Yeah.
Congratulations. Good job, man.
Yeah, and I've been that way for 8 years, and it wasn't until a year ago that I racked up some debt. So, but it happens to all of us. It's kind of like a teeter-totter. It goes up, it goes down, and you got to use debt, as you know. I mean, we have $33 million in commercial loans on our apartment complexes, so that's not the debt that I worry about, right? Yeah. It's the consumer debt that I don't like having,
right?
But technically, it was business debt because it was used to buy out a business partner. So,
yeah, you have to use leverage. Capitalism using, for example, if most of your debt, if it's agency debt, you're paying 3 to 4% interest. That's the rate of inflation.
Yeah.
Basically, the risk-free rate, and your cap rate on probably some of your multifamily is probably from 5 to 10%.
Yeah.
So you're capturing a good spread there.
Yeah, it really is. I mean, I just got my idle money just come. Well, it hasn't come through yet, but I got the email notification from SBA on the idle money, and I mean that's 30-year term at 3.75.
Yeah,
and I have 5 different companies. I can get up to $2 million per company, which they're not issuing that much anymore. They're limiting everybody at 150, but still, man, I can go buy. It's a lot of stuff you can buy at 3.75.
Right.
For 30 years. So your book, you wrote a couple books. One is King of Real Estate. Tell me about that.
Yeah. So basically, that book was written for people that want to get into the real estate banking industry. They want to open up their own bank, and they don't know what's the process, right? So the book is there for people. I've coached over 230 people to start their own mortgage bank. And someone asked me, one of my branch managers, Angelo, can you just put this into a book for us? And I did that, 2 years ago on a very simple step-by-step process, and actually how to do it, right? And so it's basically for people that, maybe they want to learn about mortgage banking, they want to, they want to fund loans, they're curious about finance. So it kind of crystallizes the process of what it takes to actually open up your own mortgage company and the opportunities and what you have to go through.
How difficult is that nowadays?
It depends on the type of entity that you're going to do, whether it's a state or Fed charter. Those are going to be much more cumbersome, and the liquidity requirements are going to be much higher. The hurdles. A mortgage bank is pretty simple. The net worth requirement for a mortgage bank is only around $1 million, but the net worth for a chartered bank, like a state charter, is about $10 million. And then there's a very thorough background check on all of the management and sponsors, right? So, and then obviously the experience. The thing about residential mortgage is that it's very highly regulated, right? So you have to have all your compliance, all your E&O, all your procedures. Someone that's very, very skilled and experienced. And so we built a real estate university to enroll students, to teach them how to become a top producer, how to originate, how to get their license, so they become a top agent, a top lender, and then they can grab into King of Real Estate and learn how to open up their own branch. So one of the things that we do really, really we're fond of is taking people that are fresh out of college or they want a career change. We put them in our university. It's an online platform. And so they go through that, then they graduate, they get their license, and then we teach them how to actually open up their own branch. And then we, as our bank, we fund that for them and actually open it up for them. They actually have a franchise opportunity. They don't have to deploy their own capital and their own risk. We actually do it for them. So actually open them a branch, like we're getting ready to open a branch for one of our top producers in Miami. And we cover all the expense, and they get to capture their own profit margins, their own P&L. So we've created a franchise prototype, to help other people to realize that.
That is awesome.
Yeah,
That's really cool. And then your other book was something about top loan originators.
The 10 habits. Yeah, I mean, basically, what does it take? I mean, during my training of all of these students, it was hey, what does it take to be successful, right? To be a top producing agent, to earn at least 7-figure income in real estate. What do you have to do? What does that person do when they wake up? How do they handle the problems? What do they have to go through? What are the things they do all day? How many phone calls do they make? So it distills down the 10 habits of, instead of the highly effective people, it's the highly effective top producer, the loan officer.
Yeah. Where do you see the real estate market going due to this COVID spam? I call it a spam. Pandemic.
Yeah, I mean, it's
pandemic.
So the other part of my profession and what I do is, so I'm an active trader. I manage a portfolio, the market is at all-time highs, close to prior to COVID. I mean, the S&P is around 3,000 right now. And so, and what's interesting is that, unemployment is kind of scary right now. There's a lot of the world that hasn't fully opened back up. And a lot of you heard Warren Buffett, he's not buying anything sold out of most of his stuff. A lot of these big fund managers are very concerned. I'm somewhat concerned on the commercial mortgage side. I'll tell you, this building that we helped to fund behind me during COVID, so it had a 98% occupancy prior to COVID, and now it's 40% occupied. So the people have literally picked up their stuff and left the building. Okay, and they're not coming back.
And those are businesses?
Businesses, yeah. So my portfolio, I'm short commercial mortgages, commercial assets. And I'm going to stay like that because you have to think about these commercial, these loans, they have no reps or warrants, no guarantees if anything happens, right? And so that's why you see people like, activist investors like Carl Icahn come in, they're shorting these commercial mortgage CMBSs. And I feel the same way because, there's no one there to catch them to hold the bag if it goes in the crapper. And so, and there's a lot of stuff that I don't think that we're out of the woods yet, Rondi. I think that we, I don't know, just something doesn't smell right to me that we're at all-time highs and there's just still a lot of unease and a lot of things that haven't been answered.
Yeah.
And I don't know. I'm staying short of my portfolio. I'm just cautiously optimistic. Obviously, I believe in America, and I think that we're going to get through this. But it's just a lot of stuff doesn't make a lot of sense right now, and I think it's too early to say everyone can just go jump back in the water.
Yeah. I attended a Zoom call with Chamber of Commerce and the SBA. It was probably 6-7 weeks ago, and they were talking about the numbers. There's 30 million small businesses, and a small business is anything under 500 employees. And they said that it was like 56% of businesses, if they go more than 30 days, will not reopen. And it was like 78% if they go 60 days or more would not reopen. Something like, just mind-boggling numbers. And we're past that. We went past that. So I suspect that we're going to see millions and millions of businesses that closed, not reopen.
Yeah.
And then I have a friend that's got 700 employees, multiple different businesses, though. He owns, I think he's 9 car dealerships down in the Southeast. And he's been in the car industry for almost 30 years. And he said this is the toughest time of his entire life in business. And not because of COVID and sales and all that, but because he is required to pay his employees that are COVID risk, even though they don't have to come to work. So even though they're back open, he still has to pay hundreds of employees every day to stay home because they're overweight or they smoke or they have diabetes or they have high blood pressure. He has to pay them a full salary.
Oh, wow.
And where the issue is he's upset about that. But the employees that are having to come in and work every day are upset about it because they are in shape. They're healthy. Yeah. And they feel like they're forced to being punished to work where their coworkers get to stay home and drink beer all day and eat pizza, Wow. But I think I think we're in for a big ride. I don't think it's over. I think we'll probably have another pandemic in October. I hope not. And we're changing things in our company as well. This will be our best month of our 13 years in existence.
That's awesome.
And it's interesting to see what people say about it. And I think here's the thing: this is not doom and gloom. The reason I brought it up was I think this is going to be one of the greatest opportunities of our entire lives to pick up real estate, to pick up businesses, to pick up things that people just simply can't afford. Like that building behind you right now, he says 40% occupied.
Yeah.
You want to start a new business? I bet you can pay a lot less in rent if you moved in, right?
Oh, Yeah. No. Yeah. I mean, you're right. I mean, there's always, through the treasury, um, there's always something that's, good on the other side. I mean, you can pick it, like you mentioned, that house that you're looking at. I mean, it's $500,000 cheaper. There's an opportunity, and yeah, you just have to just be on the right side of the trade.
Yeah, exactly. I'm on the right side. And you know what? I feel bad, but I'm not gonna pass it up and let someone else pick it up.
Yeah.
It's got to get sold to somebody.
Right.
Right. I'm not the one that caused all of this. I'm not sitting in my perch coming up. How can I destroy the world's economy?
Yeah. Yeah.
Oh, I know. Let's make up this disease and blow it out of proportion. But
yeah.
So how are you seeing with your numbers with residential stuff? You guys still pretty busy, other than the underwriting changes?
It's starting to pick back up. March, the end of March was dead. April was slow. May picked up. It peaked up, and then it looks like June that we should be back on track. Last couple months has been lagging big time.
Yeah. You do refinance?
Oh yeah.
Yeah. I have a friend that's got a big company in Beverly Hills area, and they've just been crushing it with refinancing.
That's good. That's good. Yeah.
I met him through Brad as well. Do you use Lightspeed for your university?
Yes, sir. Yeah, we sure do.
Yeah, it's good software. I missed the training they had today. Were you by chance on interactive landing pages?
No, I wasn't. I saw the link for it. I didn't attend it. I was busy in meetings all this morning.
Yeah, I missed it. I meant to be on it, and then I got a phone call, and you know how that goes. It gets sideways.
No, it is. I mean, we love it. And the students love it, and so it's we're on their latest version, and so it's great. We have over 1,000 hours of content on it.
Wow.
Yeah. It took me about 2 years
to build it out.
Yeah. So it's really, really cool.
Yeah. Well, what else you want to talk about before we go? Because I got another appointment I got to run into. But what would you like my listeners to hear about? What because you're nationwide.
Yep.
Nationwide, single family, commercial, and multifamily. You said 660 now credit score.
Yeah. I mean, so I mean, the biggest thing I would say that for people out there, if you're looking for funding, we have some very compelling loan products. Like we can do jumbo loans with only 5% down.
Okay.
We have investor lines of credit. We can give investors for fix and flip, ground up construction. If you're trying to purchase multifamily like Rondi and build a portfolio, we're a Fannie Mae lender. That's access to the cheapest interest-only capital in the world. We've done loans we cater to multi-billionaires that have 20,000 portfolio REO or a first-time buyer FHA down payment assistance customer that needs their credit repaired. So we really try to how we're different is trying to figure out to be the problem solver and help somebody to get the funding with their situation and the structuring, because the biggest thing on why loans die or someone loses the financing is because somebody didn't structure the loan the right way. And so how we're different is we invest a lot of time up front in the structuring and the art of putting the deal together to make sure that it actually funds. And the cool thing is we are the lender. We're not a broker. We're the actual lender making the loan to you, and we're going to help you to get your credit where it needs to be, or to get your paperwork or the property where it needs to be. Whether you're an investor doing a fix and flip, or you're doing ground up construction, or whatever you're trying to do, if you meet our minimum requirements, that we want to work with you and help you. A lot of lenders have gone to the sidelines and they've shut down or they're not lending. And I think that's the biggest thing. The people that you work with Fortress and Credit Repair, if they want a lender that can lend in all 50 states, and that's an actual bank that has very low interest rates and access to all these different programs, we do a lot of self-employed, like no documentation loans, bank statement loans, veteran loans, ton of VA loans, so we want to talk to you. We want you to reach out to us.
Yeah. How do they get in touch with you, Angelo?
Yeah. So they can call us. So that's one thing. We're open 7 days a week. They can call us. We're not an automated thing. Like it is like just email only. We talk to our clients. You call us, we talk to you. So they can call us at 832-431-6331, or they can go on the web. They can go to officialangelochristian.com, and they can hit us up there as well.
Where do they find you on social media?
Yep. So it's just Angelo Christian on YouTube. We have a pretty good following there, and then official Angelo Christian on Instagram.
Okay, awesome. Well, great. Well, it's been great having you on here. I do want to hold on before when I get done here, because I want to talk to you about maybe opening a branch and some other stuff that we can do together. So it's been great having you on. Again, thank you so much for taking the time, and then thank you for trusting us with your clients' credit repair needs. It means a lot to me. So
it's my pleasure. Thank you so much, Ron.
All right, and then as always, follow me on Instagram, social media, or YouTube, Facebook. I post something every single day, a little 2-minute clip on how to increase your credit score. So stay tuned for next week. See you later.